Ashley Jamerson with Ashley Lambert Realty, and today I want to go a little bit in detail about the different negotiable pieces of an offer. A lot of the times when people think of writing an offer, they specifically think about the purchase price of the house, and there are so many other components that can be negotiated in the offer that will either strengthen or weaken your offer. Of course, the obvious one is going to be the purchase price. You don't really want to lowball it. You want to give the seller fair market value. If it's a bank, you can sort of kind of be a little bit more aggressive, but the more aggressive you are with your purchase price, the lower it is, the weaker your offer will be. Okay? Some ways that you can strengthen a low ball offer is, first and foremost, you can do something like offer more earnest money. You can offer more due diligence money. Now, I did make a video about what due diligence money is, but due diligence money is a check that is literally written to the owner and they can cash it, but they bring that money to closing and it's applied to the purchase price of the house. That can be a little bit confusing, but it is a check that the owner can cash. That might be good if you are going to be asking for a lot of repairs, to give a little bit more due diligence money so they can do those repairs outside of their pocket, like they'll have the money to do it. So that's a way to strengthen a low offer. Another way is to give more earnest money. Earnest money is a check that is written to the attorney. It's held in escrow. After the due diligence period is over, that money becomes hard or solid, and if they back away before that due diligence period, they get the earnest money back. If they back away after the due diligence period, then the seller will get that money as liquidated damages. Now, while we are talking about due diligence, a long due diligence period is frowned upon by a seller because they have to take their house off the market, and it makes their house unviewable, unshowable to prospective buyers. Other people who may want to purchase the house won't be able to get in there. So if you have a 30 or 45 day due diligence period, that means that as a buyer, the buyer can walk away at any time in that 30 to 45 days for any reason whatsoever, any reason or no reason as stated in the contract. That's not seen as a good thing. So a seller is going to want to see a shorter due diligence period. They'll say, well, if you want the house inspected, appraised, if you want to get general contractors in there for quotes, get it done quick. If you want the house, let's know as quick as possible. If you want to back away, then at least I can put the house back on the market. So a long due diligence period will weaken the offer. A short due diligence period will strengthen the offer. Of course, I've spoken many times about the first step of buying a home being pre-qualification and or pre-approval. If you stick a pre-qualification letter onto the offer, it's going to strengthen your offer. If you stick a pre-approval letter attached to your offer, it's going to be an even stronger offer. So the seller will say, not only do they have a good price, they have a good due diligence money, they have good earnest money, they have a good due diligence period, but also they're pre-approved, so they can afford to buy this house. So there's items like that. It's just a lot of little pieces. I guess like the closing date would be like the last little part that is negotiable in the offer. Like another like key piece is the closing date. If you have a short due diligence period and a longer closing date, like let's say a 10-day due diligence period and a 30-day close, that's good. But if you have a 28-day due diligence period and a 30-day close, that means right up until 2 days before, you can walk away, and the seller may have purchased another house. They may start packing, pulling their kids from school, quitting their job, and here you are, you know, backing out of the contract. So strong offers, weak offers, all the components. It really depends on if you're making an offer on a foreclosure, a short sale, or an owner sale, or if the house is overpriced or underpriced, if it's like a great deal. So those are just the little pieces that you should keep in mind when you're making an offer. And just a heads up, our offer is 12 pages plus. So I say 12 pages for the basic offer, and then another 2 or 3 pages for an FHA or VA addendum, and then another few pages for any other addendum that could be attached. So it is a lot to go over. The offer does consist more it's more pieces other than the purchase price. So those are some things to think about when we get together and talk about offering. So hope this helps. Look forward to talking to you soon. Again, this is Ashley Jamerson with Ashley Lambert Realty, and my number is 980-319-3664. Talk to you soon. Bye.